Opening a brokerage account is one of the smartest steps you can take toward building long-term wealth. But it's also something that deserves a little planning. In this video, I'll walk you through what really matters before opening a brokerage account. How your money is protected, what kind of account you should choose, and the pros and cons to watch for. And toward the end, I'll share a few of the most trusted brokers that are popular for good reason. Plus, how retirement accounts like 401(k)s and ISAs can work in your favor. Hello everyone, welcome to Profit Compass. Let's get into it. What is a brokerage account? A brokerage account is a platform that lets you invest in stocks, ETFs, bonds, mutual funds, and more. Think of it as a bridge between your money and the stock market. Once funded, you can use it to build your portfolio and grow your wealth over time. But not all brokerage accounts are created equal, and choosing one blindly can cost you. Here are some key things to look out for before choosing a broker. First, understand your goal. Are you investing for retirement, short-term growth, building generational wealth? Before you even pick a broker, here's something crucial to understand. There are different types of investment accounts, and the one you choose can seriously affect how your money grows and how much tax you'll pay. The two most common types are a regular taxable brokerage account and a retirement account. They both let you invest in the same things, like stocks, ETFs, and mutual funds. But how they work behind the scenes is very different. A regular brokerage account is super flexible. You can deposit or withdraw money anytime you want, invest however you like, and there are no contribution limits. But here's the trade-off. You'll pay taxes on your profits. If you sell a stock for a gain or receive dividends, you'll likely owe capital gains tax or income tax, depending on how long you held the asset. So while it's great for short or medium-term investing goals, it's not always the most tax-efficient option for long-term wealth building. Now let's talk about retirement accounts. These are designed specifically to help you build wealth for the future, and they come with some serious tax advantages. In the US, you've got accounts like the 401(k) or Roth IRA. Think of a 401(k) like this. You skip taxes now, invest your money, and pay taxes later when you retire. Now flip that for a Roth IRA. You pay taxes up front, but everything you earn and withdraw later is tax-free. For folks in the UK, investment saving account, ISAs are great for tax-free profits on your savings, up to a limit. Also, self-invested personal pension are more DIY, but you get tax relief when you contribute, which helps your money go further. All of these come with rules, how much you can add each year, and penalties if you pull out early. But if you're serious about retirement, these tools can save you thousands. And if you want a deep dive into retirement accounts like Roth IRAs, 401(k)s, or ISAs, drop a comment below and let me know. I'd love to break those down in another video. Alright, now let's jump into some other important things you gotta watch out for. First up, hidden fees. A lot of brokers say they have zero commissions, but that doesn't mean there aren't any costs. Keep an eye out for things like withdrawal fees, currency exchange fees if you're trading internationally, inactivity charges, or annual account fees. These little costs can add up fast. Also worth checking if your broker offers fractional shares, as this feature can significantly impact your investing flexibility. Number 3, platform usability and support. A clean user interface, strong mobile app, and real customer support. These things matter more than you think, especially when markets are volatile. Number 4, investment options and global access. Some brokers limit your access to foreign markets. If you want to diversify globally, make sure your broker supports that. The next important thing to consider is whether your money is safe. Well, your money is generally safe, but only when you choose a broker that is both regulated and reputable. In the US, your investments are usually protected by SIPP insurance, up to $500,000, including $250,000 in cash, in case your broker fails, not the market. In the UK, look for brokers covered by the FSCS, which protects up to £85,000. Other countries have their own investor protection schemes, so always check what applies to you. Also, make sure the broker separates client funds from company funds. Why does that matter? When you deposit money into your brokerage account, it's considered a client fund. That means it's your money, not the broker's, and it should be kept in a separate account just for clients like you. Because if the company ever runs into trouble or goes bankrupt, your money is protected. It's stored in a different account, so it can't be touched to pay the broker's debts. This is a basic rule trusted brokers follow to keep your investments safe. Now let's talk about a few brokers that consistently get high marks for reliability, features, and transparency. Fidelity. Starting all the way back in 1946, Fidelity has been a pillar in the U.S. investment world for nearly 80 years. It's ideal for long-term investors who want a solid foundation, especially when planning for retirement. By the way, this video isn't sponsored by any of these platforms. I'm sharing this purely based on research and actual data that's publicly available online, so you can make informed choices. Charles Schwab has been around since 1971, and over the past 5 decades, it's earned a reputation for reliability and innovation. Since 1975, Vanguard has championed low-cost, long-term investing, especially through index funds. It's one of the most trusted names when it comes to building retirement wealth. Interactive Brokers was founded in 1978 and has grown into one of the most respected global brokerage platforms. With access to over 150 markets worldwide and support for multiple currencies, it's ideal for advanced traders or those who want to invest internationally. Robinhood is a relatively new entrant in the brokerage world, launched in 2013, but it completely disrupted the industry with its zero-commission trading model. Opening a brokerage account is a powerful move, but like anything in finance, the more you know before you begin, the better your results will be. If you're just starting out, focus on choosing a secure, transparent broker that aligns with your goals. If you found this helpful, don't forget to like, subscribe, and share with someone who's ready to start investing. See you in the next one.